Good morning, everyone, and happy Wednesday. It is Julie here with your TipRanks pre-market morning update, where we're bringing you everything you need to know before the market opens. So let's get into it. Alright guys, welcome back and thank you all so much for being here. This morning, we'll be taking a look at exciting stock market news, which of course involves Elon Musk this morning. We'll take a look at notable earnings reports and the morning's biggest gainers and losers. Don't forget, if you haven't already, to download the TipRanks mobile app so you can stay up to date with the latest market news and access all of your favorite research tools on the go. Links are in the description down below. Now let's get right into this morning's exciting stock market news. After a couple of days in the green, U.S. stock futures have now moved to the red. Right now, Dow futures are down 0.89%, S&P 500 futures down 0.87%, and NASDAQ futures down 0.85%. Now, the big news that's dominating headlines is in regards to Elon Musk and Twitter. It seems that Elon Musk is now planning to move forward with his purchase of Twitter for $44 billion. Shares of Twitter surged over 22% yesterday after it was reported that Musk had sent a letter to Twitter proposing to go through with the original deal. Musk disclosed the letter in a filing with the SEC. Musk's lawyers wrote in the letter that Musk's team intends to close the deal pending the receipt of proceeds related to debt financing. That is all provided the court enters a stay and adjourns the trial and all other proceedings pending the deal closing. Elon followed this up with a tweet saying that the purchase of Twitter is an accelerant to creating X, the everything app. It has been speculated that Elon Musk is looking to create an all-in-one app that would include features such as messaging, social media, and mobile payments. Analysts currently rate the Twitter stock a hold, with plenty of ratings coming in today at the $54.20 purchase price. With a slowdown in online sales, Amazon has announced a hiring freeze for corporate positions in their retail business. They'll be looking to cut extra capacity and control costs to brace up against the economic slowdown. The hiring pause is applicable to the end of the year to the worldwide Amazon stores division and excludes its cloud business or warehousing network. According to a Wall Street Journal report, Amazon has lowered its employee count by 100,000 year to date and had 1.5 million workers as of June 30th, including full and part-time. Analysts currently rate the Amazon stock a strong buy with an average upside of 42%. A health ministry in Japan has recommended Pfizer and BioNTech's COVID-19 vaccine for use in children as young as 6 months. Japan had previously expanded the use of their vaccine to those as young as 5 years old back in January. Last month, health authorities started dispensing Pfizer and Moderna booster shots that target the Omicron variant of the virus as well. Currently, the BioNTech stock is rated a moderate buy with an average upside of 56%, while the Pfizer stock is also rated a moderate buy with an average upside of 38%. And Chargepoint has announced their CP6000 EV charging solution. It is Chargepoint's most flexible and serviceable global AC EV charging solution that is now available for vehicles of all types and sizes. Designed for the needs of the European market, it's a complete charging solution for businesses and fleets that want to confidently and efficiently prepare for the future of electric mobility. Analysts currently rate the Chargepoint stock a strong buy with an average upside of 49%. Now moving over to notable earnings reports. In the pre-market this morning, we heard from Helen of Troy. They beat analyst expectations on earnings and revenue, but did trim their full-year outlook. They reported earnings per share of $2.27, which was ahead of analyst expectations by 6 cents. Revenue came in at $521.4 million, which was up 9.7% year over year and ahead of analyst expectations. But they did temper their outlook for 2023. They stated that although we reported results in line with our expectations for the quarter, we see consumers increasingly adjusting their spending patterns in response to rising inflation and the impact of higher interest rates. Their stock is currently rated a moderate buy, though all ratings are 3 months ago from their last earnings, so we'll see how price targets are reiterated following today's report. Also coming in ahead of analyst expectations was RPM International. They reported earnings per share of $1.47, beating the expectations by 14 cents. Their revenue of $1.93 billion was up 17% year over year and beat expectations by $50 million. Analysts currently rate their stock a moderate buy with an average upside of 5%. Now let's take a look at which stocks are this morning's biggest gainers and losers. Our biggest gainers this morning are led by SciTech Biosciences. Under the ticker CTKB, the stock is currently up 6.4%. They're followed by Denali Therapeutics under DNLI, up 5.8%, and Eve Holding under EVEX, up over 5%. Our biggest losers this morning are led by Helen of Troy after tempering their future outlook. Trading under the ticker HELE, their stock is down 12%. They're followed by POSCO under PKX, down over 7%, and Cytokinetics under CYTK, down over 6%. So that is going to be everything for Wednesday's pre-market morning update, getting you up to speed with what you need to know before that opening bell. If you made it to the end of today's video, make sure you hit that thumbs up button, say good morning in the comments down below, and make sure you have that TipRanks mobile app downloaded. Thanks so much for watching, have a great day, and I'll see you back here next time.